ARK Invest's Bitcoin monthly report has been put out for May, and in this video, I'm going to go ahead and break everything out. I'm going to add a little bit of color, a little bit of commentary to some of the metrics and the slides that we've seen, and I'm going to put it in the context of the broader crypto space. I'm Cody, and before you guys go ahead and continue with this video, be sure to hit that subscribe button, hit like, and also be sure to follow me on Twitter. So we're going to go ahead and get started. We're going to go all the way down here past our usual section here and go straight into market summary. Now, the market summary, they've overall said that things remain very healthy in May. There are some economic headwinds right now, but the activity in May overall has been fairly bullish. And the last part of this, which they suggest is part of the macro, is that some of these macro indicators are pointing towards a recession, which is something they've been saying probably for the last couple of months or so. There are a lot of indicators that are pointing towards a recession, and that could negatively impact Bitcoin and crypto prices in the future. Now, we're going to go ahead and get to the network activity. Network activity, for the most part, not much change, but miners' revenue were up in May. We can see here that actually is fairly bullish in their view here. However, the number of active owners and the network usage has been down. They downgraded this to neutral. Otherwise, everything else is either bullish or neutral so far in the network activity. They also talk about the cost basis, and Bitcoin's cost basis continues to be on the upside. They're viewing everything right now in a bullish view for that. That includes things like your realized price and your percent supply and profit. Those are all looking good for May. And then we go right to the on-chain activity and some specific metrics that they point out here. Now, they first talk about strong support levels. And these are strong support levels that I've also pointed out in many of my videos. 200-week moving average as of May was 25,870. Now, they said in this report that was potentially going to be a strong area of support. And based on the price action we've seen in May and June, that has certainly proven to be the case. Now, we usually look at the 200-week moving average as a fairly good test to determine whether or not Bitcoin is overvalued or undervalued. Traditionally, it barely ever trades below the 200-week moving average, and the only times you can see here in the chart in which it kind of went under that 200-week moving average was last year for a good chunk of the year, and then 2020 and a little bit of the bear market here in 2019 as well. Now, they said the largest areas of support are going to be that 200-week moving average there at 25,870, and then below that, the realized price of 20,200 that they've outlined here in green. I've said personally that it's this level right here, this realized price. Bitcoin doesn't tend to fall below the realized price this late in the cycle. Now, if you guys are curious about more information on that, I did a whole video on where we are in the current Bitcoin cycle, and it's really important to understand that that would be very unusual for Bitcoin to drop below this $20,000 level or the realized price. Next, they talk about the Bitcoin addresses, the number of Bitcoin addresses, and the fact that there's a divergence in between the number of Bitcoin addresses and the number of transactions. So what they're starting to see right now is that there are a dramatic increase in the number of transactions. However, there aren't a huge increase in the number of addresses. And so the reason why that seems to be the case is because they say that people have been minting ordinals and BRC20 tokens, and they're incentivized to reuse those addresses. And thus you have a huge number of transactions, but not a huge increase in the number of addresses. Either way, I think this is still particularly bullish for Bitcoin. ARK says it's neutral. I would say that more network activity is always a good thing. It's always a good sign that you're having people utilize the blockchain for various use cases. Next, we're going to talk about the Bitcoin SOPR and the short-term holder, what they call MVRV, or the market value to realized value. So we talk about SOPR, right? Spent output profit ratio. That gives us an idea of the profit level of the Bitcoin market. And we could talk about the market value to realized value, which traditionally gives you an idea of whether or not it's of the total market is undervalued or overvalued by comparing the current market cap with the realized market cap. And so what they're saying here right now is that the SOPR and the short-term holder MVRV is close to 1, which in their opinion, which in their view, means that the price has found a local bottom. Now, again, coming back here into May, coming back into May, let's call it May 31st, they were saying that it's close to a local bottom. That's not necessarily the case, as we've seen with the Bitcoin price lately, but they're seeing that in the past, that's usually the case. So again, with most indicators, not 100% accurate all the time. More likely, you're going to pay attention to the ones that are accurate most of the time, let's say 60%. They also talk about the realized price and specifically finding that there is a large number of traders and investors that bought between 26,000 and 27,000. And so they've highlighted this area specifically as an area of strong support. Now, again, what we've seen basically on the recent price action is that there are quite a few traders and investors here between that 26,000 and 27,000 level, and we're starting to see that with the SOPR levels getting closer to 1 and sometimes dipping under 1, that people are actually selling at a loss currently when it goes below these levels. And so they're just pointing out that this is an area in which you can find a lot of support come in, a lot of buyers come in and buy and support that price level. Next, they talk about DeFi volume, specifically comparing DeFi volume, comparing decentralized exchanges to centralized exchanges, and they're coming out and saying the fact that the decentralized exchanges continue to gain a market share here over the centralized exchanges. Now, again, this is back in May, so as we can imagine, as the SEC has put forth those cases against Binance, against Coinbase, that this level is only going to increase because now more users are shifting their transactions from centralized exchanges such as Binance and Coinbase to decentralized exchanges in order to minimize their risk with the SEC. Now, they're also saying here that the share gain is a clear sign of activity moving on-chain and offshore, again, largely as a result, especially in the last couple of weeks, of the SEC with those cases they've brought against Coinbase and Binance. Okay, now they want to go ahead and talk about the macro. All right, and so the macro picture, which is something we like to talk about quite a bit on the channel, but the macro picture right now is that these interest rate cuts are basically priced in at this point, especially once you get past about 2023 and get into 2024. You can see here that the market is expecting that the Fed funds rate is going to come down pretty dramatically, and so this has been largely priced into the market. Any surprises to the upside or downside could have a potentially large impact in the crypto space. Next, they talk about the bank willingness to lend, and that specifically has been going down. The number of loans that the banks are willing to lend out to people has actually reached a point in which they would describe as a recessionary period. So the last time it had come down to this level, you can see here in the green, the last time it come down to this level, we've had some fairly major recessions, both 2001 and 2008, 2009. Now, again, this is one of those indicators that are pointing directly towards a recession, and a recession would not particularly be good for crypto. But then again, there have been many of these indicators that have been flashing red. People talk about the yield curve inversion and other indicators that have said there's a recession coming, there's a recession coming in the last 6 months, 12 months. And so far, we haven't seen a deep or a serious recession. And my base case for the rest of the year is we're not going to wind up seeing a deep recession. And if we see a recession, it's going to be a very shallow one. Now, approaching $1 trillion, they're also going and highlight the credit card balances and saying specifically that this credit card balances has hit this level that currently is unsustainable. Okay, interest rates on credit cards have surged to 21%, including and showing that we have a huge burden of credit card debt here in the U.S. And this is also bearish according to ARK because again, as the rates in credit cards As those increase and the burden increases, the less money that people have to spend, and thus the less they're going to be buying things like Bitcoin or Ethereum or crypto in general. So they're saying that this could potentially have an impact on the broader economy and also in the crypto space. Next, they cover the glossary and the appendix and all that. So I'm not going to go through all that. If you guys are interested in that, I definitely recommend you guys check it out. I will have a link to this Bitcoin monthly report in the description. If you guys want to go ahead and look at it, definitely recommend you do. But my overall takeaway for this is that it is still fairly bullish. The last couple of reports all been fairly bullish for the most part, except on the macro. The macro tends to be very bearish, and because there's all these recessionary indicators that are pointing towards a recession within the next 6 to 12 months. And so they're going to be paying attention to this. They're going to pay attention to the transactions, the number of transactions going on the Bitcoin blockchain, which I think is bullish because we've seen a huge increase in the number of transactions, both from ordinals and BRC20 tokens. That's positive. Now, I think that in the broader context of the market, 2023 is going to be a year in which the Bitcoin price is all over the place, up and down, somewhat sideways. But then things really start to shape up when we start talking about next year, 2024, especially after the halving. So I want to go ahead and put this in the proper context. All right. So that's all I've got for you guys today. Let me know if you guys enjoy this. If you like the videos with the Bitcoin Monthly Report where I go through and see what ARK Invest is looking for when it comes to Bitcoin, definitely appreciate you guys. Leave a comment. Let me know what you guys think. This is Cody the Coin Raptor, and I hope to catch you guys in the next video.